The eMini futures markets are both seductive and treacherous. On any given session, a trader can find numerous opportunities, but along with opportunity comes many hazards. In fact, navigating your way through an eMini session without losing your hard-earned capital, let alone your shirt, it's much tougher than it seems. And whether you're trading stock index futures on the CME, such as the Russell eMini, the S&P 500, the Nasdaq, or the Dow, there are some basic things that you can do to heighten your chance of successfully day trading eMinis. And here are 5 pointers that you'll want to pay attention to if you're serious about eMini futures trading as a means of building another stream or even an initial stream of income. Number 1, trade the eMini on a schedule. And you really want to limit your trading to a consistent time period. Trading the PM session can also be good. In fact, you can break up the day into 2 or more mini sessions, each with its own stop time and dynamic goal strategy. And the important rule here is define your session and stick to it, because disciplined consistency really is the key to success. And when I mentioned that there were only so many hours for the price actions worth day trading, remember that we need volatility to make money. We need the eMini markets to move. And there are times, as you can see here, that the volume is just not worth your time. Second, don't be a slave to the eMini market. When you're day trading an eMini futures market, create a dynamic goal setting strategy that allows you to quit positive on your terms. Here at Netpicks, we have what we call a power of quitting, where we, for example, will get 2 winners and have a positive result and we'll stop trading. And because our trading strategies are so robust, you want one of those winners to be a full target winner to qualify for the power of quitting goals. And whether we're up by a tick or 4 points, we take what the market's going to give us while quitting positive on most sessions. Now we'll keep trading until we've achieved that goal or we hit the stop time. And that moves your account forward on a consistent basis while not giving back your winnings to the markets. So we quit on our terms in a pretty dynamic way. And markets, they tend to trend, and then the price action will show consolidation over and over again. So by using this type of dynamic goal setting on a day-to-day basis, you're able to take advantage of the best moves and stay clear of the choppy consolidations. Number 3, how to day trade eMini futures. Well, use a trading strategy that has an edge. And there are plenty of ways to trade, but there are only so many edges in the market that you can exploit. Manually backtest it thoroughly and then create your own trade plan from what you discover. This is going to eliminate guesswork, and it's probably going to separate you from most other traders who, incidentally, they've failed to take this important step. And also, they fail as traders more often than they're going to succeed. Learn by not doing what losing traders do, or in this case, do what they do not do. Since most traders don't have any long-term success in trading, does it make sense to follow what they do? Now, we use a trading system here that we've developed, and you can contact support to learn more about it. And one of the best things about this trading strategy is that everything you need to know is plotted on the charts. And believe me, this makes day trading, that's sometimes the fast-moving futures markets, a whole lot easier. Number 4, trading eMini futures can blow your trading account. Yeah, you know, risk management, it's vital in any market you trade. Without a solid understanding of risk management in trading, you can just forget about finding success because you're going to end up with a blown out trading account. Now, everybody has a different tolerance for risk. That's true, but you can't really argue math and probability. And I know you think you won't have a 10 trade losing streak or a 32 trade losing streak. The truth is that the possibility and the probability, it can happen. Because there is the chance that it can, you must manage your risk to sustain a string of losers. And you can use a rule of thumb such as don't take more than 2% of your balance. Use yesterday's closing balance. Know the average risk your futures trading system uses per trade from entry to stop. And this can be derived from backtesting. For example, if you have a $10,000 account balance and the average risk your trading strategy puts on a Russell eMini trade is 2 points, it's $100 per point, then based on your 2% rule, you would only be able to trade 1 futures contract. And another thing is that most traders have just enough in their accounts to cover the margin requirements of their instrument. Under-capitalization is one main factor that traders never succeed. So you want to ensure you have an account balance that has a large buffer zone around that margin requirements that you got to follow. Number 5, a trading program with instruction can help. When you first learned to ride a bike, you probably had someone behind you who could grab the seat if you started to fall. That protected you from some falls that could have caused some serious damage. That is why we suggest that if you choose to look for a trading system like the ones we have at Netpicks, make sure there's some type of trade room instruction. All the products that we offer at Netpicks for traders who are serious about taking a run at trading, they come complete with instruction, A to Z. We make it our mission to have traders of all markets, Forex, options, eMinis, be able to hit the ground running. From installing our software in your trading platform to complete instruction on the trading strategy inside of our trading room, we hold the seat so you can get your balance as you learn. And you can contact a member of our support staff here anytime to see how we can assist you in your trading. Now, there's a lot of money to be made day trading, but most traders don't know when to quit, and they're often going to turn a positive session into a negative one. Or they don't have their entire trade plan figured out. Or they break their own rules, they get distracted, they make mistakes. Now, having a mentor or a trading partner is a great way to be disciplined because you will be held accountable for your actions or your lack of actions. It forces you to trade your plan. And ultimately, it just takes a very professional mindset. You want to treat your trading as your business, not as a hobby, not as a source of entertainment or anything else. If you exercise best practices as outlined, you'll probably be ahead of the majority of traders out there, and you'll be in the best possible position to succeed.